Welcome back, everyone. Another exciting week in markets comes to a close with a bang. The market did rise into the end of the day. We maintained the upward sloping trend channel from April the 21st. If we take a closer look at the S&P 500 through the lens of the S&P E-minis, you can see that we retraced almost the entire wick of yesterday's candle. We did close above a key pivot level, that 64.12-ish area, keeping the door open for us to potentially try and retrace back up to the highs for July the 31st. Now, this market was exciting from last Friday, where we saw a short squeeze in the Treasury market with rate cuts being repriced into the market, bond face values moving up, the equity market rising, a counter trend bounce carrying forward on Monday. And then we were expecting a bit more of a pullback and potentially the second leg of the selling from the 31st and 1st to start taking place thereon after. But we did not see a bearish enough move. We changed our approach using our powerful tools. We looked for what the signals were, and we identified up as more likely for Wednesday. We identified that the move on Thursday was likelier to come down from the highs, and it did shortly after the open. We saw that pullback. We saw a dip down, but it didn't break major support structures like the weekly pivot level center, nor did it come down below our danger line. We did start off this market morning using our powerful tools, and I'm going to share that with you on a 5-minute chart basis, getting into the market open with the triple S indicator, the triple S line, being near the bottom of the triple S channel, starting to rise as we move into the open, getting an on-chart signal when the blue line, the slow momentum line, started to flatten out and started to turn up, allowing for an entry either on the bar or on the bar that closed above the MSR channel. And we saw that rise be pretty darn incredible, effectively from the 63.85-ish area all the way up to almost 64.15. Stupendous rise in the market for the market morning, and folks in the active trader room got to see me trade multiple times on the long side successfully again today. As we approached the mid-morning to late morning marker, we noted that the net long position in the markets and the Eurozone close would likely lead to a little selling. It did. We identified a drop point being down near the 63.90 area using a multi-time frame approach, and we did come down to that 63.90 area, and our likely outcome from there was it would act as a springboard, and up we go again. And boy, did it ever. It continues in the after hours right now, with the S&P 500 coming up effectively to tag the highs from yesterday's market move. Closing all the way up in this territory does put us in a bit of a stretch spot. But if you take a look at the multi-time frame dashboard, focusing in more so on the daily, 4-hour, and 1-hour charts, what does it tell us? Well, the triple S indicator is in the uppermost quadrant for the daily chart. So this is where we either have to perform or we plunge, and we're in performance configuration. But the 4-hour chart has yet to see the triple S line change the slope back up for the slow momentum line. What usually happens is a continuation up, a tag of the line, and then a pullback. And this would be the likelier outcome over Sunday night and Monday. A rise to a higher high than the close on the week, notwithstanding any major geopolitical negative events, but that would be the idea. And the hourly chart tells us that there's not a lot of runway left. So even though the ship has turned back up from the selling on the 31st and the 1st, we do still have a little room to rise, but we're going to get to that spot where the triple S line is very extended, and one of two things would normally happen at that spot. That spot being potentially a retest of the all-time highs, just to be clear. We would probably then consolidate as one option and potentially continue. Okay, that could be one option, or we'd move into a sideways range that hindsight would then tell us is a topping range, and we'd be coming back down from that range. But we're in pole position to try and rise a little further. We don't have as much runway left and gas in the tank to stay up there. So getting up to retag the prior all-time highs on the 31st of July, that 64.68 area, is within reach. However, not necessarily sustainable. If you like the approach using these simple and very powerful, straightforward signals, on a multi-time frame basis, and you want to learn how to scan for it, and you want to learn how you can use it to project and identify where things are likely going to land and when is the better time to trade, well, I am going to be doing a class tomorrow starting at 10 a.m. Eastern time. Now, I did a class on Wednesday, and by popular demand, I am coming back again to be there with you this weekend. That being tomorrow, Saturday, August the 9th, starting at 10 a.m. Eastern time. Simply go to becomeabettertrader.com/yes and learn the key strategies, tactics, the way I use signals on a multi-time frame basis, how to scan for optimal trades and manage your risk along the way, and much, much more. Lots of surprises as well in the session tomorrow, so I'm looking forward to seeing you there. Again, go to becomeabettertrader.com/yes. You can click the link in your email and get yourself situated. We'll see you bright and early. Have an incredible rest of your day, and thanks for watching.